So next up is the one and only Donald McIntyre, Token Hash, our very own toxic gentleman, who I'd say is the philosopher of ETC. Donald does fantastic blog posts under etherplan.com, often, you know, looking at really a larger scale kind of views of what's going on. And I'm delighted that he's agreed to come. He did drop out, and then Yaz and I and others strong-armed him for a very long time, and he finally agreed to come back. So we're delighted he's here.
Donald for president.
I quit like 6 times already, I think. I'm old, so I need to use special glasses. Everything's working. Hi, I'm Donald McIntyre, ETC volunteer, and I'm going to talk about what I see as the Ethereum Classic principles, vision, and opportunities. I have written about these topics on my blog, etherplan.com. So this is a summary of those writings since the last ETC summit. Principles. I'm going to put this here. This is Homo sapiens in the last 200,000 years previous to sapiens. It is very likely that Homo erectus was using stone tools as money, respected property, and other clans and tribes in the form of territory, and had implicit and explicit agreements with other clans and tribes for various functions, such as hunting spaces, access to water, a primitive form of division of labor, and other conflict minimization strategies. Sapiens very likely use the same, albeit more advanced forms of money, property, and interclan agreements to make their expansion even more efficient and scalable. In the last 12,000 years, the emergence of formally protected basic rights through law was the result of agglutination in population centers. Civilizations needed further development of language, counting methods, writing, religion, and legal systems. These cultural advances affirmed the technologies of money and further delineated property and agreements. Our expansion and population growth, combined with more efficient tools and basic rights protections, such as money, property, and agreements, enabled long-distance platforms such as the Silk Road. The Silk Road was a decentralized cross-border commercial system that enabled increased specialization across regions and cultures using emerging communication strategies, such as the price system, for signaling supply and demand states along the different links of the decentralized value chain. This has been a steady pattern to the present day, where the species has grown to over 7.7 billion people. The above is a live image of marine shipping, which is part of a global commercial system that trades over $19 trillion per year. However, this commerce is primarily agreed, performed, settled, and adjudicated through trusted third parties. This not only implies a large cost and risk, but also the absence of trade that would otherwise exist were it not for socially unscalable centralized platforms. The natural next step are trust-minimized blockchains, such as Ethereum Classic. ETC is the emergence of a new system of money and formally protected basic rights, such as property and agreements, but this time through secure cryptographic protocols. The key of Ethereum Classic is its security through sound design choices, such as proof of work as the consensus mechanism, Turing completeness to provide generalized functionality in a safe environment, and a fixed monetary policy to protect property rights and ensure that users can count on a reliable store of value and medium of exchange. However, these basic rights and features can only be guaranteed only if the most strict principles are followed. For this, ETC has shown to have, still has, and will continue to have, for the foreseeable future, a strong culture of security through strong principles. Each of these principles has a specific function in guaranteeing sound money, property, and agreements on the platform, even in the absence of higher authorities, which is precisely the desired state of affairs. However, strong principles sometimes can present apparent contradictions. For example, there is something I call the permissionless fallacy, which is the idea that because blockchains are permissionless, that means that anything can be done, even if it undermines permissionlessness. Of course, that must be wrong, because if it were true, ETC would cease to exist. Just like free markets, money, property, and agreements require strong underlying systems, permissionlessness has to be protected by the ecosystem. The correct argument is that because blockchains are permissionless, anything that undermines permissionlessness must be stopped. This brings me to a delicate issue in secure blockchain ecosystems. Toxicity. In systems that seek to dissolve top-down leadership and governance, to uphold etiquette and diplomacy is a security hole. Is the security hole. What is regarded as toxicity is a function of free speech, the level playing field the internet creates, and the absence of top-down governance that I mentioned before. With no top-down governance, the only way of protecting blockchain integrity in the social layer is to have symmetry between players with capital, developers, and intellectual power, relative to regular people who may not count with those resources, but who many times are right. A way of looking at what is seen as toxic behavior in the blockchain industry is to regard it as a permanent state of alert, online activism, and public protest, but without the risk of violence. And it works. If not just see all the times ETC should have died, but it's alive and will in fact be critical infrastructure in the future. Vision. So what is ETC in layman's terms? It is a decentralized computing system that hosts programs, data, and has a processing capacity. The difference with your personal computer or using remote cloud services is that ETC is a remote computing peer-to-peer system, which makes it trust minimized and decentralized. The system has six components that make it work, and combined, they can power decentralized applications, machine-to-machine interactions, smart contracts between people and businesses, and its currency that can be used as a store of value, which is also perfectly a legitimate use case for ETC. Yes, ETC is money. ETC has a unique positioning in the highest value niche in the industry. Proof of work, plus Turing completeness, plus fixed monetary policy. If you think about it, after Ethereum moves to Ethereum 2.0, ETC will be the only trust minimized, permissionless, and immutable proof of work smart contracts platform in the world. Such strategy is very important because there are three forces that will shape the future landscape of the blockchain industry, and ETC is very well positioned for that future. The format war will narrow the large amount of blockchains in existence today to a very few in the future. Layering will divide the industry between security versus performance, where secure proof of work systems will be the base layer, or L1, and scalable proof of stake systems will be layer 2. Systemic risks means that even if highly secure, all blockchains, including Bitcoin, still have some IT operational social layer and thus generalized systemic risks. Because people will naturally tend to diversify these risks, the Bitcoin maximalist view is incorrect. It's very likely that there will be several systems at the base layer, not only one. My prediction is there will be 3 or 4 winning blockchains at the base layer, and all other systems will operate on top. The base layer is going to be like an global operating system. If my hypothesis is right, I think a reasonable guesstimate is that the ones that will prevail at the base layer will have approximately this distribution, where Bitcoin will have the lion's share with 50%, and ETC will be second with somewhere around 25%. So in this context, what relationship can Ethereum and ETC have? To answer this question, it is worth looking at the differences between Ethereum and ETC when Ethereum migrates to Ethereum 2.0. As it can be seen in the table, both Ethereum 2.0 and ETC have smart contracts platforms and each have a native cryptocurrency. ETC has decided, based on a high security strategy, to stay with proof of work, a fixed monetary policy, and full replication. And Ethereum 2.0 has chosen to pursue a high-performance strategy going with proof of stake, a variable monetary policy, and sharding. So if ETC is not as scalable, but very secure, and Ethereum 2.0 is very scalable, but not as secure, what is a good strategy for both to follow? Up to now, both Ethereum and ETC, and all other chains for that matter, have been competing for the same spot beside Bitcoin as premier blockchains, fully secure and fully scalable. I think this is not possible, and the market will be organized in layers as explained before. The opportunity that Ethereum 2.0 and ETC have in this context is to actually adopt the layered model and create a combined L1 and L2 system as soon as possible to be first to market. However, I think the key of any collaboration between Ethereum 2.0 and ETC is to preserve each chain's styles and independence so they can follow their own technical roadmaps, monetary policies, and freely interoperate with other systems. One thing that could delay or disrupt the trajectory of ETC as described in this talk is Ethereum 1.x. There is increasing discussion that Ethereum 1.x may be perpetuated after Ethereum migrates to Ethereum 2.0. However, the market, especially developers, consumers, enterprise, and government, need the smart contracts industry to consolidate on a few winning systems to be able to start investing serious money and building viable products on these highly valuable technologies. Following this logic and other reasons in this list, I think a marginal Ethereum 1.x would be a low-quality, low-value residue of Ethereum. This is Debbie Downer. As to ETC's competitiveness, here it can be seen that Fedwire and chips, which are the large value real-time gross settlement and net settlement systems in the US dollar system, have individually very similar transaction volumes as ETC's transaction capacity. In terms of monthly and yearly volumes, ETC can perfectly compete on a pro forma basis against Fedwire and chips combined because it operates 24/7, 365, while the others work only 251 days a year. And ETC is programmable and permissionless, while the others are not. This makes ETC perfectly competitive as is relative to the US dollar high-value payment system. And with further scaling improvements, it can totally even surpass those systems. Speaking of improvements, after Atlantis, Agartha, and Aztlan, which focus on compatibility, I think to follow the ETC vision and strategy expressed in this talk, the long-term roadmap of Ethereum Classic should focus on these broad lines. Increasing transaction capacity responsibly, maximizing node count by minimizing potential bloat, building highly efficient and secure L2 connectivity, increasing technological collaboration with Bitcoin. One question I get frequently is, why does ETC have value? My answer is that ETC is identical to Bitcoin as a currency. It's an excellent store of value and has the same underlying evolutionary reasons and physical features such as being scarce, durable, costly to produce, divisible, portable, and transferable. ETC is in fact digital gold. Additionally, something Bitcoin does not have and will never have at the base layer, it is Turing complete. However, ETC does have the same identical philosophy as Bitcoin. This is that it will always prioritize security over everything else. The majority of the other systems in the industry have chosen performance. All this makes ETC a perfect complementary system with Bitcoin in the future landscape hypothesis that I described in this talk. If Bitcoin will be this incredibly secure store of value, but with the limited capacity of having smart contracts at the base layer, then those smart contracts can perfectly be stored and executed inside ETC. And with interoperability technologies, such as atomic swaps, they can move value between ETC and Bitcoin permissionlessly, effectively making BTC Turing complete at the base layer. Before, I compared ETC with Fedwire and chips. But when comparing ETC and Bitcoin at the base layer against world major currency settlement systems, BTC and ETC have individually higher transaction capacity than all systems individually. And combined have higher transaction capacity than all systems combined on a yearly basis. As I said before, the fact that BTC and ETC combined are programmable and permissionless makes them extremely competitive with much higher finality as compared with these global high-value settlement systems. This is yet another strength upon which ETC and Bitcoin could collaborate technologically to compete against global traditional systems at the base layer. In my layered blockchain industry hypothesis, layer 1 competes with gold, but is programmable and socially scalable on a planetary scale. Layer 2 competes with fiat, but is programmable and highly secure when anchored to layer 1. In terms of ETC's market value in particular, I think the crypto base layer as a sector will eventually surpass the market capitalization of gold shown in the previous slide. However, as a valuation exercise, assigning Bitcoin and ETC a 50% and 25% share of the crypto base layer respectively, it can be seen that if the sector reaches just 50% of the value of gold, then Bitcoin will be worth around 1.925 trillion or $91,000 per BTC. And Ethereum Classic will be worth around 962 billion or $4,500 per ETC. That's more or less 1,000 times the current price. Both estimates are on a fully diluted basis. Opportunities. In terms of opportunities, I see everything I have described in this talk means that it is perfectly suitable as a pure store of value. ETC is perfectly suitable as a pure store of value for high value, high security property and agreements. As a base layer for other chains, it will be a totally complementary base layer to Bitcoin as well. And of course, it will also be optimal for the IoT industry, as was ETC's first goal and vision after the DAO hard fork. My vision in the core infrastructure and services segment is that companies and teams such as ETC Labs Core, Parity Technologies, IOHK, the Multiget team, and Blockstream can follow the very successful Red Hat model of consulting, training, and support on a subscription. They can also provide services like Blockstream does, such as full-service sector-specific sidechains and/or mining services. Companies like Ethernode and Saturn, and products like EtherCluster by Yas, Kuri of the ETC Cooperative are indispensable complementary infrastructure for cloud nodes, home and office hardware nodes, API services, ETC-based operating systems, and decentralized exchanges. Many more models can be added in this sub-layer. The big boys like IBM, Microsoft, Oracle, SAP, Amazon, Google, and others are very likely going to acquire some of the players mentioned above and provide large-scale enterprise solutions based on ETC. Final thoughts. I think a formula for ETC's future success is to continue to have a clear trust minimization philosophy and principles, because that is precisely what makes ETC valuable and complementary with other systems. to connect and collaborate with Ethereum 2.0 and Bitcoin and other systems, to be cautious so that collaboration does not change the integrity, thus the underlying value proposition of ETC, for all participants to define clear business models and messaging, to communicate all these things relentlessly. Thank you very much.
Does anyone have questions for Donald?
All right. Great talk. So you joked when you were going on stage that you've quit 6 times. I'm curious, as you reflect on what were some of the reasons why you quit, and what brought you back, and kind of what are the lessons learned?
Well, the first time I quit was just a spontaneous anger, which is normally what happens to me. I was fighting with Zach and Shane last year, and we were all part of the ETC dev team. And I think I would say that the base pattern is more or less the same. When I see something that I strongly disagree with, I get angry, and that reflects in my behavior, I guess. That was the first time. The other times were always community things, like when I remember one time when we were fighting with Yas and Anthony about collaborating with Virgil and Ethereum, and I saw that as a threat. So I spontaneously burst. Recently, I quit, and I was not going to come here to this because ETC Labs core had hired one of the developers, Thomas Stiebel, who was independent, to join the team, and Thomas was maintaining the only native client that we had. So I thought that was a continuation of centralizing everything on ETC Labs. Yes, the pattern I would say is I react. For example, the last time it was because they moved the client to the ETC Labs core GitHub. And when I call out that movement, because I see it as a centralization or a threat of centralization, then other members like Yas, Bob, and others, sometimes instead of calling out the move of moving the client there, they call me out for calling them out. So it creates like a circle, and I feel that I'm the only one trying to do these things and protect the integrity of, I don't know, the philosophy of ETC. And when I feel that, I say I'm leaving. Sometimes I even deleted the account, but last time I didn't delete it because I've come so many times that I know I'm going to come again. And there's no other. This talks about also about what I see the uniqueness of ETC is that when I say, okay, I'm not going to work on ETC anymore because it's a lot of energy to be defending the principles as in Bitcoin. But Bitcoin is already a huge ecosystem, and it's already has its philosophy, and I think it's a ship that is already with a lot of inertia, momentum. ETC is very small, and when I see the landscape, I see that there's no other opportunity as Ethereum Classic as a blockchain because of this. What I said about the positioning, no? Proof of work, fixed monetary policy at the base layer as a global operating system. Thank you for the question. There was another question here.
Hello. It is a great picture that you have painted on the ETC going forward, but I just want to know your views on how the big financial institutions are taking especially given the comparison that you have given for the transactions on the ETC. What are your thoughts on that? How they are going to react to this projection that you have put?
When I have some experience there, because I come from Wall Street, working UBS, Securities, and Morgan Stanley, large institutions. Then I quit to start my own financial technology company in 2000, thinking that the internet was going to change finance as it changed the media industry. But finance didn't change with the internet only. Finance was still like captured by the corporations because on one side, due to regulation, it's very difficult even in the internet for fintech firms to enter the market. And the other reason was because the monetary base is still controlled by a central bank and the financial institutions. But when blockchain came, that breaks at least the second part, no? The monetary base or the control over money, I think is going to be disintermediated finally, and that is going to liberate the industry for new entrants, etc. They still have the protection of regulation, of course, but we have seen that a whole new industry has emerged of exchanges, for example, Coinbase, Binance, and many exchanges around the world. That's a whole like parallel industry, parallel to the financial industry. In terms of behavior, in one of the slides I put there, here, the big boys will acquire some of the players, make all the mistakes incumbents usually make. And that means that they're following the same steps. They're going to try to do their own blockchains, which is an oxymoron because blockchains are meant to be global, permissionless, and they want to make blockchains but closed and permissioned, so it's a total contradiction. And then they're going to go to a step where they're going to say, okay, we accept that Bitcoin exists, but it has to be regulated. And then they're going to say, okay, it's a good technology, and then they're going to start buying Bitcoin, and it's going to be in their treasuries, etc. So I think that's going to be the pattern. Okay. Thank you.
Thank you, Donald.